back to the Real Estate Investing Guide. We're glad you're here. If you learn anything from our videos, be sure to hit the like button and subscribe to the channel so you'll know when we put out new real estate content. Chapter 15. Be proactive on the appraisal process and scrutinizing the closing statement. Be proactive on the appraisal process. Talk to the commercial mortgage lender and let them know you would like to speak with the person conducting the appraisal before they go over to the property. Sometimes lenders might give you pushback. In this case, tell them you aren't going to try to affect the professional's commercial real estate appraisal methods in your favor. You just want to make sure they have the most up-to-date information about the property. You will want to get the appraiser the following information. 1. The latest version of the rent roll. 2. Tell them about any lease proposals that are being discussed and taken into consideration. 3. Give them the latest sales and lease comps in the area that might not yet be in their records. 4. Any cost-cutting measures you will be able to take. 5. Any additional income you'd be able to make upon implementation. 6. Any other things going on in the area that might show the area is improving. Give them all the information in a binder in person and tell them you'd like to take a few minutes just to review the information with them briefly. Most of the time, the commercial property appraisers will appreciate this information because you are essentially doing some of their homework for them. Scrutinize the closing statement. Often investors just want to close a deal by the time they get to the closing statement, but it would pay to scrutinize the closing statement before closing the deal. Sometimes it also helps to have your attorney, accountant, or a commercial property manager or real estate asset manager review the closing statement to see if there is anything in there you should be privy to or might have missed. Feel free to ask questions about any fees you don't understand or agree to. These are examples of just a few of the things you might need to review on the closing statement. 1. Association fees or membership fees. 2. Supplies or backup equipment, machinery and spare parts. 3. Personal property. 4. Inspections. 5. Service contracts. 6. Lender legal review. Be sure to document and take pictures of things such as supply rooms and backup equipment or machinery. Sometimes spare parts or supplies or personal property could add up to tens of thousands of dollars easily. Go back to the property a couple of days before the end of the due diligence period to make sure nothing has been removed. If anything has been removed, you then have the pictures you took and documented lists you made. You can send them to the seller to tell them to put the stuff back or ask for credits for the missing items. Often, they will comply and just put the things back. Legal review fees also shouldn't be totally put onto you. Lawyers will review the rent rolls or other basic information you have already covered, so there is no need for you to front the bill on legal fees for the lender. The lender should at least be willing to split this part of commercial real estate closing costs with you, if not eat the costs themselves. Thanks for watching. That concludes this part of the Real Estate Investing Guide. Be sure to check our other guide on pre-offer due diligence. This series is dedicated to all the things you'll want to do before you make an offer on a potential real estate investment. Be sure to contact Laker Real Estate Services for all your Twin Cities real estate needs. LakerRealEstate.com 763-645-4617.